In our last class, we were going over exercises that would help you solve your homework problems. This presentation is a continuation of our class presentation of doing exercises that will help you complete your homework exercise. Let's start off with the first exercise we'll call 3-1. Here we have a company that had essentially 4 transactions, and here we see the first 2. We see A and B, and the requirements for the problem are record each transaction. So let's take a look at transaction A. Rhodes Company purchased $140,000 in raw material, and they purchased these on account, so we purchased them on credit. In this case, then, we would create a journal entry that is going to debit raw materials inventory to increase the level of inventory to recognize the fact that we now have $140,000 worth of additional inventory, and we would credit accounts payable, which represents the liability that we're incurring since we're purchasing these assets, the inventory, on credit. Let's take a look at entry B. It says $128,000 in raw materials were requisitioned for use in production, and of this amount, $104,000 was for direct materials and the remainder was for indirect materials. So we know $128,000 of total materials were requisitioned. Out of this $128,000 worth of raw materials, $104,000 were used for direct materials or for production. So those direct materials eventually are going into work in process. So let's take a look at the journal entry in this case. And the entry is debit work in process for the $104,000, which represents the amount of materials that are being used in production, directly in production. Debit manufacturing overhead, which represents the difference between the $128,000 and the $104,000. That's the $24,000, and that represents the raw materials that were taken out of raw materials and used as part of manufacturing overhead. And the last amount is the credit to raw materials inventory, which represents the amount of raw materials that we requisitioned out of inventory. Okay, let's go on to the next 2 transactions, C and D. So in C, it says total labor wages of $176,000 were incurred. Of this amount, $162,000 was for direct labor. So again, $162,000 worth of labor went into direct production cost and therefore work in process. And the remainder was for indirect labor. So if we look at our total labor wages and compare them to the amount that we used in direct production, what we see is the difference between the two is going to be $14,000. So that represents the amount of labor that was used as an indirect, that was part of an indirect cost or manufacturing overhead. So let's go ahead and take a look at the journal entry for this. Debit work in process, $162,000, which represents $162,000 for direct labor. Also, we said we also used some labor for manufacturing overhead or indirect type of work on the production floor, and that was a difference between the total labor wages and the amount that we use for direct labor. So the difference is $14,000, and that's debited to manufacturing overhead. The last area is payroll payable, which represents our total payable, in other words, our total labor wages of $176,000. Okay, now let's go on and take a look at the last entry of this exercise, entry D. We incurred additional overhead costs, in other words, indirect cost, during the period for May. And these additional manufacturing overhead costs, these indirect costs, amounted to $218,000. We're also going to assume that we purchase these on credit, these different overhead costs. So we're going to use accounts payable as the credit of the journal entry. So in order to make the entry, what we're going to do is we're going to debit manufacturing overhead, which represents the actual costs that were incurred for indirect costs. And we're going to credit accounts payable, which represents the fact that we purchased all these manufacturing overhead items on credit. And with that, that's the completion of slide or of example 3-1. Okay, now let's take a look at example 3-2. And Mishawaka Products recorded the following transactions for the just completed month. And we're told the company had no beginning inventories, which simplifies the problem. And we're given all of these particular transactions, transactions A all the way through G, and we're told to basically post the above transactions in T accounts and also determine the cost of goods sold for the period. So let's go on now. We're going to split this problem up so it's a little bit easier to see into the different transactions on a couple of slides. So let's go ahead and take a look at the first, I believe, three. Let's look at the first three transactions. Transaction A says that $81,000 in raw materials were purchased in cash. So in this case, we're going to increase the value of our raw materials to reflect the purchase, and we're also going to decrease the cash asset, which represents the amount of cash that we spent to purchase the raw materials. So the entry is debit raw materials for $81,000 to increase the value of materials, and then credit cash for $81,000 to decrease the value of the asset. Let's take a look at transaction B. $78,000 in raw materials were requisitioned for use in production. That means we're taking the value of $78,000 of raw materials out of raw materials and inventory and going to use it somewhere in production. And as it says, of this amount, $70,000 was for direct materials. So what that's saying is that $70,000 was for materials that were actually directly used in the production process. In other words, those materials will go into work in process. And the remainder was for indirect materials, which in this case, the remainder would be $8,000, the difference between the $78,000 and the $70,000, but this $8,000 amount was for materials that were for use in indirect production activities. So in that case, indirect production indicates that those materials would be charged, the actual use of those materials would be charged to manufacturing overhead. Let's take a look at the journal entry. We're going to credit raw materials for the full amount of $78,000. Then we're going to debit work in process for $70,000, which is a portion of the materials requisitioned that are going to go directly into production. The remaining materials of $8,000 go into the actual use in terms of manufacturing overhead. Let's take a look at entry C. Total labor wages of $209,000 were incurred and paid. In other words, when we say paid, that means the labor wages were paid out, and then when we pay them, that's in cash. Of this amount, $180,000 was labor that was attributed to direct production costs, so that amount's going to go to work in process, and the remainder, which happens to be $24,000, the difference between $209,000 and $185,000, that remainder is for indirect labor, or the actual use of labor for manufacturing overhead costs. So let's take a look at the journal entry for that. We're going to credit cash for the full $209,000 worth of wages we paid people. Going to debit work in process for $185,000 and then debit the remaining $24,000 for manufacturing overhead. Now let's take a look at the last four transactions of this problem. So let's take a look at transaction D. Additional manufacturing overhead cost, in other words, indirect costs. So additional manufacturing overhead costs of $211,000 were incurred and paid. So let's take a look at the journal entry for those costs that were incurred and paid. And paid, of course, indicates that these costs were paid in cash. So let's go ahead and make the journal entry. We debit manufacturing overhead in the amount of $211,000, and we credit cash for $211,000. Okay, let's take a look at transaction E. Manufacturing overhead costs of $255,000 were applied to jobs using the company's predetermined overhead rate. So we're going to take $255,000, we're going to debit that to work in process, $255,000, and credit it to the amount of manufacturing overhead. Now here you can see from our manufacturing overhead account, anything that is credited to manufacturing overhead is being applied to work in process. So that's the amount of costs that are being applied to work in process. On the other side, the debit account with the miscellaneous, or the three debits here, indicate actual costs which were charged to manufacturing overhead. So the right side, or the credit side, is the amount that is applied. The left side, or the debit side, are the amounts in this case that have the actual costs that have been charged to manufacturing overhead. Okay, then F, all of the jobs in progress at the end of the month were completed and shipped to customers. So let's record the completed portion first. So what that means, if a job is completed, it's removed from work in process and moved into finished goods. So in this case, the total amount of work in process was completed and moved to finished goods. So the entry would be a credit to work in process for $518,000, which would represent basically the value of the work in process account if we total the debits up. And the credit, we credit work in process for $518,000, and we debit the value of our completed production into finished goods of $518,000. Now, F also says that basically they were shipped to customers. The products were shipped to customers. So I have to remove all of the products out of finished goods and move them into cost of goods sold. So we would debit cost of goods sold for $518,000, and we would credit $518,000, in effect removing the total value of finished goods into cost of goods sold. Now we get into the any underapplied or overapplied overhead for the period was closed out to cost of goods sold. So the manufacturing overhead account, again, the debit side are actual cost, the credit side are applied costs. Now, in this case, what we do is we're going to total the account balance up in manufacturing overhead, and we can see we have $235,000 worth of debits, and so those are our actual cost. And in the case of the credits, $255,000, which is the amount that we've actually applied to work in process. So we see there's a difference of $20,000. Now, the manufacturing overhead account can go either way in terms of there's more debits than credits or more credits than debits. If there are more credits than debits, that indicates basically we have overapplied our overhead compared to our actual cost. If the debits are greater than the credits, that means we have underapplied our overhead in relationship to the amount that the amount of overhead we've applied. So in this case, we're going to have to we compute a $20,000 difference between debits and credits, and we have a credit balance of $20,000. That amount has to be closed out now. In this case, we're indicating to the cost of goods sold account. So when we do that, it's going to be a credit to cost of goods sold for $20,000, and we're going to make a debit to manufacturing overhead for $20,000. And that will in effect zero out our manufacturing overhead account and effectively transfer that credit balance to the cost of goods sold. Now, the last requirement in the problem says compute what cost of goods sold then are going to be for the month of May. Well, that's simple now because we have $518,000 worth of debits and $20,000 worth of credits. When we net the debits and credits together, we have a balance of $498,000 in cost of goods sold. So that would be the total cost of goods sold for the month, $498,000. Okay, now we're going to look at example 3-8. And in this case, we're given some entries into some specific accounts. And based upon those entries, we're going to be required to identify the reasons for the entries A through D. So let's go ahead and start off with that. And we'll take a look later in the problem at these other items that are required. Okay, again, we have our 4 major accounts and we need to do an analysis of transaction by transaction. So let's take a look at our first item, which would be transaction A. We have a debit to manufacturing overhead in the amount of $630,000, and we have a credit somewhere. We don't see it. It's actually going to be to accounts payable or cash because it represents the amounts that would have been spent for manufacturing overhead. So if we go ahead and create that journal entry, it would look like this. We debit manufacturing overhead for $630,000, credit accounts payable for $630,000. And when we're doing this, this represents the actual overhead costs incurred. Remember, manufacturing overhead, when we take a look at the left side or the debit side of manufacturing overhead, those are the actual costs, indirect costs incurred in our manufacturing overhead. On the credit side, on the other hand, that represents the overhead costs that are being applied utilizing the predetermined overhead rate. So now let's take a look at entry B. And in the case of entry B, we have a credit of $611,000 of manufacturing overhead. And remember, what I mentioned is when we're applying the overhead, which is the credit side, we're going to be debiting work in process. So we'll find the $611,000 over here in work in process. So if we take a look at the entire journal entry, it's going to be debit work in process, $611,000, credit manufacturing overhead, $611,000. And the reason for that is to record the overhead that we've applied to work in process based upon our actual production cost driver. Okay, so we're done with that slide. Let's look at transactions C and D. Okay, transactions C and D, we have exactly the same accounts, but now we're going to take a look at transaction C. In transaction C, we had a debit to finished goods in the amount of $1,115,000. Now those finished goods had to come from somewhere. Typically when we're debiting finished goods, that's from a transfer from work in process and all the items that are completed. And you'll notice here we have a credit to work in process for $1,115,000. So let's take a look at the journal entry. Debit finished goods for $1,115,000 and credit work in process for $1,115,000. And indeed, this represents the transfer of the value of completed products then completed out of work in process into finished goods. So let's look at the last transaction, which would be transaction D. And here we're showing cost of goods sold credit of $1,050,000. Well, that came from basically when we transfer our finished goods, when we sell them into cost of goods sold. So we see the $1,050,000 on this side. So again, if we write out the journal entry, it's debit cost of goods sold $1,050,000 and credit finished goods $1,050,000. And again, the reason for this entry is to record the transfer of the value of completed products that we sold out of finished goods into cost of goods sold. Okay, now as part. Okay, now we're looking at the next requirement, and this is the requirement in the first slide of this problem. Basically says close the manufacturing overhead, the under or over applied overhead, out to the cost of goods sold account. So this is pretty simple because the over or under applied overhead sits in our manufacturing overhead account, and that happens to be, in this case, $19,000. And notice the debit side is actual, the credit side is applied. So in this case, we have under applied. In other words, our debit side is greater than our credit side, so we've actually under applied the amount of overhead. So we're going to have to close this account out to cost of goods sold. The way we do that is very simply, we basically make a credit entry to manufacturing overhead, and we debit cost of goods sold. So that's what that is asking for in this case. Now there's one other item in this problem, and it says, okay, in our last requirement, sometimes companies, rather than charging all of their overhead, either as a debit or credit, into the cost of goods sold, they choose to apportion a portion of that over or under applied overhead back to their various inventory accounts that were used in production. So in this case, this company, the requirement in the problem says we need to apportion this back to our inventory, and rather than just simply charging everything to cost of goods sold. So in this case, we're going to have two inventory accounts and one related inventory account: work in process, finished goods, and cost of goods sold. We're going to take that $19,000 difference in our manufacturing overhead account and apportion that back based upon the amount of overhead that has basically flowed through that exists in work in process, finished goods, and cost of goods sold. And here we're given, this is part of the problem from the first slide, the overhead that had been applied to the production during the year is distributed as follows: work in process $480,000, finished goods $97,760, and cost of goods sold $464,360. So now we're going to apportion that, and the way we do that is we go ahead and start applying the numbers for right from the top. The $48,880 worth of overhead basically that has gone through work in process, finished goods $97,760, and the amount of overhead that was in cost of goods sold is $464,360. And that represents the total amount of in effect actual overhead that's gone through the accounts of $611,000. Now what we want to do is apportion this $19,000 on a pro rata basis. And in this case, we take $48,880 and we divide it by $611,000. We end up with, in this case, 8%. We do the same thing for finished goods. We have $97,760. We divide it by the $611,000. That ends up being 16%. We do the same thing with cost of goods sold, and that adds up being 76%. Now, in order to apportion that under or over applied overhead, in this case, of $19,000, back to these individual accounts, all I need to do is multiply, as an example, the 8% times $19,000, and that'll represent the amount of overhead I'm going to apportion back to work in process. So you can see $48,880 times 8% equals $1,520. We do the same thing for finished goods. The $19,000 times 16% equals $3,040. And then lastly, the $19,000 times 76% equals $14,440. So the total amount of overhead we need to basically apportion to cost of goods sold, finished goods, and work in process totals to be, of course, $19,000. So the journal entry that we're going to make as a result of this apportionment is we're going to debit work in process for the $1,520, we're going to debit finished goods in the amount of $3,040, and we're going to debit cost of goods sold for $14,440, which represents the total amount that we're going to basically be crediting out of manufacturing overhead.